South Florida's housing market is unraveling, and it's no longer rumor, it's visible in the numbers. More than 275,000 residents are projected to leave Florida in 2025, the biggest exodus since 2008, pushed out by insurance premiums reaching $12,000 a year, mortgage payments that have doubled since 2021, and falling sale prices that are stripping away equity across the region. Entire cities are watching inventory surge and sellers slash $40,000 to $75,000 just to attract buyers. The question isn't whether the market is shifting, it's how deep this slide will go. Florida's population boom has reversed. Miami-Dade alone could lose more than 67,000 residents, while Broward and Palm Beach may shed over 33,000 combined. Pandemic-era price spikes of 60% to 80% are now unwinding, with cities like Cape Coral and Naples seeing values fall $40,000 to $75,000 off their peaks. Statewide, the median price has slipped to $734, down 4%, the biggest decline since 2011. Meanwhile, financing costs have exploded. A $350,000 loan that once cost $1,475 a month now exceeds $2,300 at today's rates. That extra $825 is pushing first-time buyers out of the market and draining anyone who bought near the top. Insurance is where the pain really hits. Florida's average premium has jumped 34% in 1 year to $3,023, but coastal households regularly pay $8,000, $12,000, and bills above $15,000 are being reported in Miami-Dade. In Fort Lauderdale, insurance alone can rival the mortgage. With costs spiraling, 177,000 homes now sit for sale, a 34% jump year over year and more than double the entire Northeast housing stock. Investors are fleeing too. Institutional purchases have collapsed from 25% of sales to under 6%. Rental yields are weakening in places like Palm Bay, where rents fell 12% and vacancy rates continue rising. Short-term rental markets are worse. Properties once selling at $675,000 in Punta Gorda or Cape Coral are struggling to fetch $500,000, with some sellers cutting $100,000 plus to escape. Policy changes are making things worse. FEMA's revised flood zones pushed 89,000 Broward County properties into mandatory insurance requirements overnight. Miramar alone saw 25,878 homes reclassified, while Pembroke Pines and Hollywood absorbed tens of thousands more. Families who never faced flooding risk are suddenly being forced to buy flood insurance, often costing $1,200 to $3,000 per year. Premiums rise up to 18% annually, compounding year after year until full risk pricing hits. For many, Florida home ownership no longer makes sense. Meanwhile, condo markets are entering a crisis. In Pompano Beach, median condo values have fallen nearly 8%, while special assessments are hitting owners with $20,000 to $80,000 bills to comply with new rules. HOA fees topping $650 per month are pushing retirees to list their units, driving inventory up 44%, and buyers are only biting at discounts. Fort Lauderdale condos now linger for 93 days, more than double last year. Statewide, the same pattern repeats. West Palm Beach owners face average assessments of $38,000 per unit, and markets like St. Petersburg are watching investor interest evaporate as insurance, reserve requirements, and flood risks make cash flow impossible. Punta Gorda's single-family prices are down 7.3%, condo values down 11%, and days on market stretch past 4 months. Palm Bay is drowning in oversupply, with 3,200 new builds sitting unsold, forcing price cuts, rate buy-downs, and incentives. But demand isn't recovering. Cape Coral is ground zero. Prices in the Cape Coral-Fort Myers metro are down 11% in 2 years. Half of all listings have seen price cuts, and nearly 8% of homeowners are underwater, the highest share in the country. More than 12,000 homes sit unsold, and investors are taking six-figure losses just to exit. Equity is evaporating, and for many families, selling at a loss is the only way out. And Florida isn't alone. Early warning signs are emerging across the Sunbelt. Dallas-Fort Worth inventory is up 31%. Austin's active listings are up 13%, and Phoenix prices are down nearly 7% from peak, with homes sitting for almost 80 days. The same forces, rising supply, falling rents, higher carrying costs, are driving price cuts across Texas, Arizona, and beyond. For buyers in 2025, the power has finally shifted. Negotiating seller-paid closing costs, rate buydowns, or HOA coverage is becoming normal. But cheap sticker prices don't make ownership cheap. Flood zones, insurance, assessments, and taxes can add $800 to $1,500 a month to carrying costs. And ignoring that math is how people go broke. Reviewing reserves, association budgets, and pending assessments is no longer optional. It's survival. South Florida's market has moved from pandemic boom to painful contraction. Outmigration is accelerating, inventory is swelling, and investor demand has evaporated. The long-term recovery timeline is uncertain, but one thing is clear: buyers must do more homework than ever before. The market now rewards discipline, not urgency.